Good morning. Today we're going to discuss about a very important topic, the fundamentals of corporate finance. When you say finance, the key three components you must remember. See, the finance is classified into three categories. The one, public finance, which is dealing with all state and central government, municipalities, semi-governmental agencies, all those things. This is related to, say, for example, government, all the things, budgeting, how they effectively, utilize the resources like tax revenues and other things. It's a part of public finance. But coming to corporate finance, company expenses, particularly from where they're going to mobilize the funds, the resources of funds, and building a capital strategies to ensure a sustained, a growth also. So corporate finance, you must be very careful because all the funds you are obtaining from different sources and utilizing it. Though you are dealing with the funds, it's not your funds. But coming to the personal finance, it's related to an individual. Say, for example, you take myself, I want to plan my retirement planning. So what kind of investment I am supposed to make it. So what kind of portfolio I can construct, where I can invest my funds, all those things will be coming under personal finance. I put it in very simple nutshell: public finance, corporate finance, and personal finance. But when you come to the finance functions, they are classified into three categories. One is investment, decision we used to say. Second one, financing, and third one is coming under dividend decisions. When you say investments, okay, wherever from the source of funds where you obtain the funds, you'll be allocating the funds to a long-term assets. Here you must be very careful because the volume of money what you're going to invest is going to be huge. So your decisions should be accurate. You cannot take wrong decision which may be quite expensive too. So you have to consider many factors. The volume of investment is huge, and relatively the period of investment is also huge. So it's a long period of time. At the same time, the risk associated with the assets, various risks also you have to consider. So it should be a balancing between risk and return, how much you are going to earn from that. And investment, yeah, selecting the best assets as per the appropriate cash flow predictions, all those things. Coming to the financing, yeah, where and how we are going to acquire the funds from different sources. You can say the banks, okay, as far as borrowed funds, or you can go for a financial institutions like State Finance Corporation, then IDBI, Industrial Bank for IDBI, Industrial Bank for industrial banks, and you can go for State Finance Corporation. Then I mentioned about it, TIC, Tamil Nadu Industrial Investment Corporation, and we have NABARD we have. So there are many other banks are also available where you can get it. Okay, State Finance Corporation, Industrial Finance Corporation, and take about it Exim Finance and everything. And coming to the third one, the company earned a profit. How the profit is going to be distributed? So you have earned the money. This is the profit company earned. Okay, how much I'm going to give it for my bank loan? This is for the bank loan, and this is the portion I'm going to give it for my debentures. Likewise, this is for my preference shareholders. This is the money available for equity shareholders. So the way in which you are going to distribute your profit, that will be coming under dividend decisions. So three important decisions are related to the corporate finance. One is investments related, financing, and dividend. But if you look at the overall story of the progress of the progress or the evaluation of finance, it's divided into three categories. The one, traditional phase. Second one, it's a transitional phase where a lot of changes has happened. Third one is a modern phase, what we are doing it. Traditional phase mainly focus on arranging the funds, particularly the financing part. They have focused mainly on that one. Whereas coming to the second element, transitional, now they started giving importance for effective utilization of funds, where you're going to obtain the funds. Modern phase, okay, it's cover all three major areas. Okay, here how we're going to utilize the finance obtained from different sources. Okay, and now you may have one thing in that, so you do all the things. See, right from investment, financing, dividend. But if you look into that basic objective for the corporate finance lies in two common objective. One is we used to say profit maximization. Another one, wealth maximization. Yes, of course, company will try to earn as much as possible profit. That will be coming under profit maximization. Okay, here if you look into the profit maximization, focus on short-term earnings. particularly increasing with net profit. Okay, how I can stimulate the net profit? How will stimulate the net profit? One, the revenue generation I'll try to increase with that, and cost control. Okay, I'll do that, and by doing all those things I'll increase my profitability. So here, profit, earn as much as possible profit, earn as much as possible profit. That will be the part of profit maximization. Okay, but come to the wealth maximization, it's long term. Okay, this one is the short term profit maximization. Wealth maximization long term, it'll try to ensure sustainable growth and shareholders value. How it's going to happen? It will increase the market value in long run and shareholders wealth. We accumulated wealth for the equity shareholders. It will also going to increase. So put in a very simple way, maybe looking like both the concepts are gloomy: profit maximization, wealth maximization. But profit maximization is for a short term, whereas wealth maximization is a broader term. So every organization will try to do a wealth maximization. And coming to the final method, here we have taken corporate finance. If you take the finance, they are classified into three: public finance, corporate finance, and personal finance. And coming to the major functions of finance, categorized into three categories. One is investments related, financing related, and third one a dividend related thing. And coming to the major concepts which are involved in corporate finance, one is profit maximization and wealth maximization. I think this fundamental video will be useful for you. Okay, if you like this video, okay, like, comment and share. Thank you. All the best.